Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal Budget Headquarters. It's a Thursday morning. Markets overnight looking better. Equities higher, yields lower, dollar lower. And hopefully, we continue on our journey of repair and recovery. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, morning.
Hi, morning, both of you. And it's not a bad backdrop, to start with. We don't have too much of volatility overnight. No fresh headlines that could be, going all over the place. So starting, pretty steady.
Well, that's right. And the FIs were back in the previous trading session. But I think this morning we need to hear that song, right? Slim Shady, because yesterday they let us down. But no worries. I mean, 1,500, 2,000 crores, I think you can take it, right? If they're going to sell even so much, 1,000 crores or thereabouts, that's doable. Because earlier they were selling 3, 4, 5,000 crores.
So at least 7,000, 8,000 crores in a day.
I mean, I was just trying to be... But yeah, the cues are fairly good. I think we have a couple of big earnings today. Yeah. So, Prashant, let's get straight to the action.
Absolutely. And let's just take it from the top then. So, US markets had a positive close, as we were talking about. Now, S&P was up about 0.4%. And, the close was pretty decent. Big moves on the yields, right? 10-year yield lost about 9 basis points. I'm talking about the US government bond. And the yield is about 4.42 as of yesterday's close. The dollar index is under the 108 level. And over the last 2 days, actually, the dollar index has given back about 1.5% now. Oil prices down 2%. So actually, the backdrop in terms of global macros, etc., is pretty positive. Equities higher, yields dollar lower, and oil prices down about 2%. And we're under $75 a barrel mark now. In terms of direct Trump news flow, what you heard from President Trump himself, the news flow was limited. But that's not to say that there wasn't other sort of allied news around what Trump wants to do. So, you had the U.S. Treasury Secretary Scott Bessent, who came out and said that President Trump wants lower interest rates, but is not directly calling for the Fed to cut rates. He also essentially went on to say that, yields are selling off. Yields are lower because the market has realized that they're going to cut and lower government spending. The other one, of course, was the White House press secretary, who came out and said that President Trump has not officially ordered boots on the ground in Gaza. So that was the other sort of talking point. In terms of what to sort of watch out for from here, you basically have, U.S. allies who are expecting Trump to unveil the solution to the Russia-Ukraine war next week. There were a couple of reports, all unconfirmed timeline. There is that summit with President Putin of Russia looming, but there is nothing specific to it. But this was a big campaign promise. And I think everything that he's been doing that he promised, I think this is the next one, which will have implications, global implications for asset markets as well. Now, just to sort of circle back and come back to the levels here. So, I mean, as we highlighted yesterday morning, the resistance levels, right? The upper end of the falling channel was a resistance. We got exactly to those levels and then sold off. And we ended flat, at least on the Nifty. The broader market did much better. And I think that essentially was the reason why, yesterday was a good session, even though you had red on the Nifty. Now, the Nifty needs to get past 23,807. So that is slightly higher than the upper end of the falling channel. But what that is it is yesterday's high. So as an immediate kind of level, that is the level to take out for the market to move higher from here. Support comes in once again at the 40-hourly exponential, which is moved to about 23,502 on the downside. These are very near-term levels, 100, 150 points on both sides that we are looking at. Now, Bank Nifty, the resistance levels are twofold, 50,893. We never got to it yesterday. That is a 50% retracement of the entire fall. And then you've got 51,120, which is the next number. Supports come in at the 40-hourly for the Nifty Bank, which stands at 49,731. So that's the picture. Lots of numbers and lots of company-specific earnings that markets will react to. But I think the big Q is, of course, only tomorrow, which is the fact that we have the RBI MPC decision, Monetary Policy Committee decision. A 25 basis point cut is expected. But I think what markets really want to sort of do tomorrow is, watch what the new RBI governor says and what his stance on various policies, etc. is. I mean, he's in a way, he's been in the government and policy circles for a long time. But the markets, the stock markets, the forex markets, etc., don't know his stance on many of the important issues. So I think very, very important, and that's the big one tomorrow. Surabhi.
Yeah, absolutely. And, we're all waiting to see. I think the market's going with almost a given that a 25 basis points rate cut is coming. So we'll see if that actually leads to some excitement and some positioning and some build-up in financial stocks today. Watch out for banks for sure because of the RBI expectations tomorrow. But talking about the global picture, Asian markets are actually very much along the flat line. There's no major positive move. Minor gains coming in here and there. The Hang Seng's been flip-flopping between negative and positive throughout. Taiwan's doing okay. Japan's showing some gains as well. So not too bad. As a lot of those headlines around tariff wars, etc., at least that noise has ebbed. We don't have anything fresh overnight on it. Also, equity is getting a boost because the dollar continues to move lower. Even yesterday, it's now around 107.56, as you can see. And not just that, the cool-off in U.S. Yields, that's also aided the sentiment around equity markets. On the dollar, by the way, the talking point now is, again, the dollar-yen pair and what's happening over there, because the yen has been surging big time in the last couple of days. In fact, quietly, the yen has crept back to the highs that we saw last in December, early December, around December 9 or 10. That's when the yen was last around this 152 handle. So why is the yen rising against the dollar? Largely because the Japanese economy is doing really well. There was some wage growth data that came out yesterday that was fairly positive. Even the inflation numbers have been, sort of on the higher side in Japan. And we know that the anticipation is that the BOJ will stick to its rate hiking path as the Fed looks at perhaps more cuts down the year. So that's what's been pushing the yen. Keep an eye out on this. Gold yesterday was sparkling once again. Even though equities were fine, this uncertainty around what's happening with geopolitics and with trade, that led gold to actually move up. The spot gold level touched a high of 2882 yesterday. That was almost a 1% rally. So gold continues to sparkle. For us over here, it's become very much a stock-specific market. The consolidation continued at the headline index level, but the Nifty is holding 23,700, so that's not too bad. Like Nigel pointed out, we didn't see an encore from the FIs yesterday, so there was no follow-through on that 800 crores of buying that we got in the previous session. There were sellers again, but not too much, about 1,600 crores of selling, and we had some DII money coming in, so not too bad. It's all about individual stocks. We'll focus on earnings and results and just a couple of ones. We'll, of course, spend a lot of time this morning debating Swiggy, whether it's good or bad, because the losses have increased at the, at the EBIT line, at the net profit level, the PAT line also. The losses increased year on year as they're investing more in quick commerce. Food delivery business is okay. So let's see, the debate is going to continue on Swiggy for sure. Cummins is a very good set of numbers. It's a beat from top line, margins, profit. Everything is higher for Cummins. And there's Nerolac. We've been talking about the stance that the market has taken on Asian Paints, really weak numbers and downgrades coming in. Kansai Nerolac is not, painting any different picture. The sluggishness there. There's some pressure on the margins as well. So these are just some of the names. We'll talk about many others. And today's list, the heavy hitters from the Nifty are lined up. Look at that. Bharti Airtel, Hero Moto, SBI, ITC, Britannia, Trent, 6 stocks from the Nifty, and so many others beyond it. Got our hands full today, Nigel. Well,
that's right. And from the global cues, all the 3 factors are in our favor. The US yields were a little bit lower, the dollar index a little bit softer, and Brent crude prices as well lower. And you like the troika to be well behaved, and that's precisely what happened yesterday. So global cues, no worries. We made this point yesterday. The Nifty seems to have found its feet, and if you don't get any additional negative, maybe the Nifty consolidates a little bit, but the bigger action will be seen in the broader markets. Why is that? Because they got hit harder. So if the Nifty can consolidate a little bit, move up marginally or stay in a bit of a band as well, we'll see an outperformance. And that's precisely what happened yesterday. The small cap index ended with a gain of close to 2%. Towards the end of my chat yesterday, I had mentioned this as well. What about the FIs? It's a net short market, as we've been talking about. 82% of their positions on their net short side. And now they're mildly adding some long positions as well. In a net short market, if you don't get any negative news or any fresh negative news, well, that's enough actually to take us higher. And that'll be pretty good news. And in the last few trading sessions, to be fair, from the start of the series, we just started. But, the net short positions have come down by close to around 25%. So that itself is telling you that there is a bit of a bounce that's already happened because of these shorts that have got covered a little bit. And you have some long addition as well that we have seen. Moving to the options data, remember today is the weekly expiry, so it's important to look at these data points. And the bears still believe they can defend the higher levels. That's why in yesterday's trading session, between the 23,700 call and the 23,750 call, you had more than 1 crore shares getting added out there. which is telling you the bears believe they can defend this 23,800 mark for the day. And on the downside, you have the 23,750 put that was active as well. Sometimes there's a bit of a strategy getting into expiry. Maybe you write the 23,750 call as well as put, pocket closure on 250 rupees, and then you're playing for a bit of a range. But the crucial levels come up for you. Support for the day will be around 23,550 or thereabouts. And yesterday's high becomes an important reference point at around 23,800 of them. On the way, you have the 50 DMA as well. So that's the important level on the upside. The Nifty Bank, that holds key from here on. Yesterday, we were telling you that 50,800 odd mark, that's an important resistance level because of a couple of technical levels that come out there. Two Qs. One is the RBI meet tomorrow. What will be here from the RBI governor? That's going to be important. And the second factor is SBI. We know that's a mover in terms of its numbers. You normally get a big move out there. And just looking at the counter yesterday, it seems the street is factoring in, maybe a subdued set of numbers, just going by the price action that we saw yesterday. So if the numbers are not too bad, then maybe the stock doesn't get such a hard hit. We'll keep an eye out on SBI. At around 2 p.m., I think we should get those numbers. That's going to be the important one. The stock that I'm tracking today is Avalon Tech. Stock is corrected closer around 30%, I think, from the recent peak. All this in a matter of a month or thereabouts. It went dancing away. And then, in fact, from the peak of around 1,000 rupees, it's come down to around 700 rupees. The numbers look pretty good. It beat consensus estimates by closer around 10%. The EBITDA numbers around 35 crores, which is the best that we've seen in a quarterly performance. And the margins as well in excess of 10%. So good set of numbers. Valuations at around 50 times. I'll keep an eye out on this stock because of the correction we've seen, because the numbers are pretty good. And the valuations not extremely expensive. It was trading at around 80, 90 times earlier. So at around 50 times, we'll keep an eye out on this set of numbers.
Okay, Avalon Tech is going to be on the radar as well. Let's